years, as you rightly pointed out, we have done every kind of building that is available. We're even making a jail as it stands.
Government projects, normally do you face any risk relating to payment?
We burnt our fingers in the past. 10, 12 years ago, we had huge outstandings in the market, and we sort of shrunk, and it took us a while to get out of those hits that we faced.
Real estate prices, as you also know, in last couple of years have skyrocketed environment. So how do you see this whole scenario? Do you think bubble, or like it's a long-term growth story that India is currently seeing? Hello everyone. Today we are at Vascon Engineering. So Vascon Engineering is a civil construction company based out of Pune. It does work in various industries like residential, industrial. It builds hospitals, malls, and many more stuff. Today we are joined by Dr. Santosh Sundararajan. He is the Group CEO of the company. Hello, sir, and thank you for shooting this podcast with us.
Good morning. Good
Good morning.
Prerit. Thanks.
So basically, before we start, can you give us a brief about your history, what you have done in education? Did you work in any other company before joining Vascon Engineering? Because I have read you are civil engineer, and you have done PhD, you have done masters. So if you can tell a bit about your education and the history.
Sure. So I'll personally, from my side, I'm a civil engineer. I'm also a doctorate in structural engineering from Singapore. I was in Singapore for about 13, 14 years. So I studied there, did my engineering doctorate as well as my MBA in finance, and worked there for 5, 6 years in the construction industry, both in the design as well as execution. And then I joined Vascon in 2007, came back to India and joined Vascon in 2007 at that time, of course, as a senior engineer in the company. And I think around 2013, I took over as the CEO of the company. As far as the history of the company is concerned, the company dates way back to 1986. Our promoter, Mr. Vasudevan, he started this company in 1986 along with some angel investors from the Cipla group of companies. And they started off as primarily EPC players for the industrial sector. Starting off making a factory in Patalganga, and then couple of years later, with some accrued profits in hand, the company branched out into real estate in Pune, and we've done very niche real estate projects, condominium projects in Koregaon Park, which is the higher end location in Pune, and those were done way back in the early 90s by the company. And by the mid 90s, I think the company had established themselves as both real estate players in Pune, very premium housing, and EPC players across the country. And from there on, I think the growth in both divisions has been happening, organically for us. So we are more than a 40-year-old company.
Yeah. Okay. So starting with your EPC business, it's the major revenue contributor for the company. So initially you started with industrial work. How did it change that you are now present in so many industries? You are building hospitals, and so like what's the mindset in this? Like every different projects, do you require different kind of thinking, and how does it work? Can you tell us briefly about it?
Sure. So every kind of building is a different kind of building for us. Considering all the more that we are mostly involved in the design as well.
Yeah.
So this has sort of been a chicken and egg story for us over the last 40 years. Where our real estate arm has forced us to become experts in design, because on the real estate side you have to design your own product. And then as we gained that expertise, we've done a lot of backward integration within the company. As I said, I'm also a structural engineer. We also have a structural design back-end studio. We have post-tensioning, we have GMP, which is again a subsidiary. And Mr. Vasudevan, who is our promoter, is himself very much a passionate engineer. So all along this journey, we've been much more focused on engineering, rather than only the real estate side of sales and marketing alone. So what happened to us, as you said, is we've been developing various kind of buildings, and we've been gaining expertise in engineering and designing those buildings. And then we've been using that strength in the EPC market to offer the same to other clients. So over the last 40 years, as you rightly pointed out, we have done every kind of building that is available. We're even making a jail as it stands.
Okay.
So every building, every kind of building that is there, except a big temple, which is what we realized recently, except a big temple, we've really done every building that is there to offer.
So it's good that you are present in so many industries. You have like a lot of tailwinds to grow into, like multiple. You have possibility to enter multiple industries who are seeing good growth, and you can do work from them.
Absolutely.
Work from them. So you were telling about the backward integration. Can you tell us a bit more about it? Because what I have seen in your company, 80% of your business is for the government contracts. How does the design part comes into that? Like, if you can tell us a bit about the whole bidding process and
Sure.
your business model in that.
So, see, over the years, as I said, we've done a lot of backward integration in the sense that we pride ourselves on being good engineers and architects. We have an architectural team, we have our in-house engineering team, design team, MEP team, all of those teams in place. Fortunately for us, the government in the last 10, 12 years has been floating a lot of their tenders on the EPC mode, which is sort of a design and build kind of a contract, whereby the quantity risk or the design risk is undertaken by us. The engineering risk is undertaken by us as contractors. So we don't no longer remain pure thekedars, as they say. We become engineers who have to engineer the building, optimize the consumptions of materials, optimize the costs, and give an offer and compete at an engineering level to back the order. So in such projects, we've seen that our ability to beat competition is much higher because we are able to back our design team, and based on their analysis and strengths at the tender stage, we are able to take a calculated risk, which is a win-win situation for the client as well as for us.
Okay, so in these government projects, normally do you face any risk relating to payments and stuff? Because in the past we used to hear that working with the government and doing tenders for them, we used to get some issues with the cash flows and all. Do you still see it in the industry?
So look, I mean, one of the biggest risks we have as contractors being in the market is timely payments. There is no doubt about it. Whether it is private sector, whether it is government sector, we've burnt our fingers in the past. 10, 12 years ago, we had huge outstandings in the market, and we sort of shrunk, and it took us a while to get out of those hits that we faced. We had to write off a lot of debt from our books and clean up our books and start fresh. So those wounds are still fresh for us. So we're very careful, be it private, be it government, we're very careful in the way we manage the funds and the way we have our outstandings in the market. So we have a separate bank account for each project. And if that bank account runs dry, I mean, we are not here, we are a listed company, we are having equity from shareholders. We are not here to fund someone else's development as a contractor. We have our own real estate arm, and we would much rather use our equity from shareholders to be churning real estate. So in EPC, we are very clear that our cash flow cycle has to be positive throughout the project. And if the client stops funding, we sort of have a call to take between the devil and the deep sea, where we sort of slow down the project. Having said that, in the last 5-7 years, when we've been actively involved with the government, payments have been on time. We've hardly faced delays. Once in a while, if there is some election or some some event which keeps the client, the team busy from the government side, then our payments get delayed by a month or so. But so far, we've also chosen projects like hospitals and departments where the funding is allocated, police housing, where the funding is allocated well in advance. And so we've not faced those kind of risks, touch wood, so far.
Okay. So, I mean, what's the reason behind so much focus on the government projects instead of private projects for companies, something like that?
So we do not have kind of a compulsory rule within the company that we're going more for government. It so happened that, as I said, in the last cycle, a lot of our money was stuck with private builders, and we faced a lot of crisis when our dues didn't, come on time. And till then, we were quite shy of working on the government front. In our 40-year history, it's only the last 7-8 years that we have changed our DNA to become contractors towards the government. Before that, we used to stay away from the government. Just we thought, private sector is better. But having burnt our fingers in the private sector, we decided that, if we are in contracting, then you have no choice. You have to learn to play the game on the government side. And fortunately, as I said, parallelly the government started floating tenders on the EPC, design and build mode. So, it's no longer a very dirty game like it used to be 10, 15 years ago, where competition keeps undercutting the price, and you just make an entry and then you see how you can optimize your profits or make some profits. As of now, it's quite a professional game working with the government. The government has also been very professional in floating, very good tenders and honoring payments on time. And they have good PMCs to manage the quality on ground. So, our reputation is intact. Earlier, we used to be worried about reputation working with the government. I think all of that has changed in India, and today government is one of the best clients you can have.
Okay. And so in these tenders that you apply to, do you go in with a fixed margin mindset that we are going to let's for an example, let's say you take a 10% margin thing, that you will only work if you are getting 10% margin. So is this across the board for the whole all of the projects that we undertake?
Yes. So, I mean, very simply speaking, at a gross profit level,
Yeah.
we target anywhere between upwards of 13, 14%. We do not go below that. That then translates with scale, with these kind of gross profits, average 14, 15%, we will be able to hit PBTs of 10. We are currently at 8 and 9. Our endeavor is over the next year to try and push our PBT levels to 10 at a company level. At EPC alone. Real estate, of course, will give better PBTs.
Yeah.
For that, our gross profit should be in the range of 14, 15, 16, 17. So yes, whether it's private or government, if that at the bidding stage, if the competition is taking us at gross profit levels below that, then we tend to drop out.
Okay, that's good. And so just as you were telling about in the last 10, 15 years, you faced some issues with the government and all. And if we see your numbers before FY23, the growth has been pretty, I mean, it has been on the same levels, around 600, 700 crores top line levels. So what was happening during that period that the company was not able to see any growth?
So Vascon, as I said, no, is a 40-year-old company,
Yeah,
and
yeah.
this is Vascon 2.0 now.
Okay.
Okay, so I think a company of this age, will go through a cycle every now and then, where I mean the premium earned from the past remains intact, the brand is intact, the learnings are intact. What happened, say around 2013-14, two, three things happened to us. One, of course, as I said, in the market, the cycle turned in India. A lot of real estate players for whom we were working, all renowned names in the market, all of them faced big struggles themselves in the real estate market, and so huge outstanding didn't come up to us. We had debt, and so we sort of went into a spiral where servicing our debt was becoming tough. So from 2013 till about 16, we were facing this at the operational level. Second thing was that the team that formed Vascon, below Mr. Vasudevan, our promoter, most of the team, were 60 plus and were retiring. And so the new team under me and Mr. Vasudevan's son, Siddharth, who was still young, who was still coming into the business, and Somnath, our CFO. So we sort of took over and refreshed. So we took a deliberate call to shrink, to stabilize, take stock of the situation, clean up the balance sheet, and then start fresh for the next jump. So this was one. And the third thing was also our capital structure, our ownership. As I said, we had angel investors from the beginning, from the Cipla group of companies, promoters of Cipla as well. And their next generation also wanted an exit. And we had to find, their shareholding was quite big. The percentage that they held in the company was huge. And so we couldn't just get an exit in the market. So we had to find a strategic exit for them, which was good for them as well as for us, so that we find a partner whom we are amicable with, and the promoter family is amicable with, to carry the company forward. So all of this was happening in that period from 2013 to 16, 17, 4-5 years we lost in just stabilizing and taking stock of these three things. And then finally in 16, 17, the Inam group also took a further bet on us. They were with us since our IPO. They backed us further, so they arranged to buy out the Cipla group in the market. And we did a rights issue. We raised 100 crores in the company. The promoter family was able to infuse more capital. Their shareholding went up. Our debt came down. And so from 2017, we were able to then think of growth again. Unfortunately, COVID took away 2 years.
Yeah.
But otherwise, 2023 onward, the growth we are seeing would have happened from 2020 onwards or 21 onwards.
Okay.
So COVID also added to this
Mhm.
stagnation couple of years.
Yeah.
But yeah, so all that is past. It's behind
Yeah,
us.
yeah.
That now there is really nothing to look back on those. So as I said, sometimes a company that has flown high
Yeah.
for 25, 30 years needs to take a pause, a breather,
Yeah, yeah.
restabilize for 5, 6 years. The brand is going nowhere, the quality is going nowhere. Our pre-qualifications are going nowhere. What we've learned over the years is going nowhere. It's just a stabilization.
Okay.
I think now we are ready to now punch much higher than what we've done in the past.
Okay, so you were talking about the debt and all debt situation. So you did right issue for that. And also you have been selling your, I think, non-core assets from your subsidiaries and all. So has that process been completed, or what are those non-core assets that you had in your books?
So there's a slight strategy shift from the company's Vascon 2.0 from the earlier times. I think we are looking at real estate also as a game of fast turnover, not huge investment in land, and basically bringing to the table sales, marketing, brand, good quality design and execution, and churning the projects faster. So in a way, we call it glorified EPC. I mean, the returns are much higher than EPC for sure, even if you play this game. But we feel the real estate market has changed post RERA. And therefore, now there are 3 different pockets. There is one pocket for a company like Vascon, whose expertise is design, execution, brand, delivering a good product and branding it and marketing it. Then there is land aggregation, and then there is financing. And RERA, sort of has professionalized real estate to a large extent compared to 15 years ago. Now, why am I giving this background is because we did hold assets, like we've developed hotels in the past, and we held some equity in some of these hotels like Hyatt in Pune, Royal Orchid in Goa. We've sort of held assets in commercial spaces that we developed. So over this period, when we were anyway cash crunched, we sort of re-strategized and said, going forward, we want to bring to our shareholders what, rather than investing on behalf of them for the long term, we want to bring to our shareholders, profits by generating revenue in our core strength, and investment decision can be theirs. We don't want to play the investment role over there. So we sort of step by step exited a lot of these holdings that we've been having, and we've brought the money back into growth of the company.
Okay, so now what I understood from what you're saying is that you are now focused on designing the stuff and the construction, and not actually owning the lands where you are building those buildings.
Correct.
So coming to this with the real estate side, I think you have your own projects, you do it in JVs as well.
Correct.
And you have partnership with realtors also.
Correct.
I think in Mumbai and all. If you can just give basic idea of this segment, what exactly is happening? So these buildings that you are developing on your own, so in those lands would be bought by you, right? Or if you can just explain.
So see, historically we've had 1 or 2 lands. So even today we are developing a couple of projects in Pune where land belongs to us. These lands were bought long ago. We also have a project in Bombay, in Powai, where land belongs to us because we sort of exited a hotel in Goa, in barter of which we got a land. I mean, it was not, we sold a hotel and had to invest buying a land in Powai. So these 3, 4 land parcels exist in our books even now. And these we are developing and exiting rather than selling the land, because we feel that these are good parcels where we can realize more value by developing. But other than that, in the last 5, 7, 8 years, or in fact almost 10 years, we haven't invested money to buy land. So it's a strategic call that if we have money, we will do more joint venture projects, redevelopment projects. We will do more square feet of construction rather than buying land. So going forward, we'll be doing real estate primarily in this model: joint venture, joint development. Sometimes it's a profit sharing partnership we have with certain investors. Many times it's a top line sharing model we have with the landowners. And or nowadays we've started redevelopment in Mumbai. We have a couple of projects in Santa Cruz in Mumbai, which are redevelopment of old societies. So this is what we tend to be doing going forward.
Okay, so redevelopment, I think majorly in India, it's present in Mumbai only. I think after 20-25 years. So your focus would be majorly in the Maharashtrian region for these kind of projects?
In real estate itself, our focus is only in Pune, Mumbai, and Coimbatore.
Okay.
We are only in 3 cities,
Mhm.
and we do not have immediate plans to expand beyond these 3 cities.
Okay.
We feel there's good enough market in these 3 cities.
Mhm.
We went to Coimbatore long ago, and we've done a couple of development projects there, so we have earned a brand name there. So we feel these are 3 cities where Vascon is recognized.
Mhm.
In Mumbai, we forayed into redevelopment. As you said, there's a lot of redevelopment potential in
Yeah.
Mumbai, suburban Mumbai, old societies. And for us, the size of those projects are also, what we would like to be participating in Mumbai. We wouldn't want to be exposing ourselves to huge risks of much bigger projects when, there are much bigger players in Mumbai already. But here, I think we can bring to the table our quality, which we feel is far superior to most of our competition. And we can deliver that in niche pockets in Mumbai. And the prices, of course, the sale prices in Mumbai are much higher. So even if you do a smaller project, your profitabilities are higher. Redevelopment is also now coming into Pune. We have a team looking into such possibilities in prime locations where the FSI has, sort of double tripled from the olden times. And so there is potential in Pune as well. But yes, Mumbai is the number one for redevelopment.
Okay. And now just as we are talking about the markets. So your presence in Mumbai, because I think real estate prices, as you also know, in last couple of years have skyrocketed with lot of demand coming in the real estate, even in this high inflationary environment. So how do you see this whole scenario? Do you think it's a bubble, or like it's a long-term growth story that India is currently seeing in the real estate market, or maybe even the EPC? A lot of projects are coming up, urbanization is happening. So how do you see the situation, and how are you planning to benefit from the same moving forward?
So see, again, real estate and EPC in the medium to long term, I think it's a no-brainer that India has tremendous potential, because you compare to any matrix starting from per capita to any other mediumly developed country, and we still have a lot of catching up to do. We have the population, we have the education going up generation by generation, and so the demand for housing, demand for office spaces, demand for malls is still at a very nascent stage in India. And so in the medium term, I think all of us in the industry are very clear that construction is still nowhere near saturation compared to some of the developed countries. They haven't been constructing for a while. Their demand has sort of stagnated and sometimes gone down. We are far behind in terms of time on that curve, so we have a huge up curve left on this front, which is great news for people like us who are in both real estate and EPC. Again, in a very short term, 1-2 year, 5-year period, sometimes the interest rates go up, sometimes the pessimism comes in for a bit, demand keeps fluctuating up and down. Currently the demand, as you rightly said, is very robust. Last 2-3 years post COVID, real estate demand has been fantastic. So I think in the medium term, we have nothing to be pessimistic about. In fact, it's all great going forward.
Okay, so this was about the EPC and the real estate. And even in the EPC, you do work for the IT parks. And I think you were talking about you don't mind working for data centers as well.
Sure.
So are you looking, because India is generating a lot of IT services jobs and data centers. Recently, Microsoft announced that they are planning to set up data centers. I think Apple was also talking about it. So are you looking into these newer segments to invest in compared to the traditional projects that you are working on?
Yeah, absolutely. See, data center is just yet another type of building. We've been involved in the design and partially execution of quite a few of these. But yes, we want to now obviously bag a few data center orders, because those are the kind of buildings coming up currently. We've bagged an order with Capgemini currently in Chennai for development of their software block, their IT expansion, which also has a small data center building. So that's about a 450 crore order which we've recently taken. So we are looking for such orders from good AAA rated private clients as well, which will add to our portfolio. So yes, we see all kind of buildings. We are agnostic to any kind of building that is there. Our call as of now is, we do not want to further expand ourselves at this point of time into other kind of infrastructure like roads or power or sewage treatment plants or metros or runways or those kind of things we haven't done, and at this point we do not want to take a risk and expand into, because we feel there is huge demand or huge supply of buildings that are coming up, government and private, and we are still punching way below our capacity in this sector. So we would like to first grow within this sector. We are open to anywhere in India, any kind of building, any client.
Okay. So in these orders, currently you are working in the range of 500, 600 crore size per order size. So what are your targets in like coming years? How do you plan to grow from here? And what would it take? Because for a construction company, you require debt. You need to have a very healthy balance sheet to showcase to the clients. So what are you targeting in the coming years?
So in the last 2-3 years, our balance sheet has drastically improved. Our rating has improved, quite a few notches, and currently our BG limit assessments, our assessment from the bank for our working capital limits, both CC and bank guarantee limits, have improved quite a bit in the last 2 years. That has now given us the momentum or the raw material to bid for more and more EPC projects and keep our growth story alive. Without that, we would have. So that was also a part reason for stagnation in the last 2-3 years. After we had sort of cleared off all our other issues, the bank was waiting for us to perform and then increase our limits. And without bank guarantee limits, growing on the EPC side was a bit of a constraint, especially in the government sector. Now that cycle is also in the past for us. And as you rightly said, we have struck a sweet spot currently in the range of 500 crores, 600 crores orders from the government. We get qualified for these. We are finishing a 400 plus, almost a 500 crore work in Chhattisgarh. That will give us a certificate that will help us now qualify for 750, 800 crores. And then, a couple of years from now, we should be qualified to bid for, 1,000 crore orders. So we want to then go up this chain, because the competition gets a bit more professional as you go up there. You're not fighting with smaller contractors. You end up fighting with bigger contractors who also tend to get their costing right most of the time. They do not make errors. Also, they're not desperate to undercut and take at the wrong price. So I think there is a lot more fairness in the price that you get in bigger contracts than in smaller contracts. So that is a big plus for us. We're looking forward to bagging a 750 crore order next.
Okay. And these 750 or 1,000 crore orders, how different are they from the current orders? Like, I understand they are much bigger. I want to understand on the complexity side. Like, how, if you can give an example, currently in India, what kind of projects are 1,000 crore orders or 750 crore size of orders?
You're right. So you see, a hospital that is getting done in a suburban or in a smaller town or a city would be 300-400 crores. Like a similar hospital which they want to do closer to a bigger city would then go to the 750-800 crores. Similarly, airports. We are now doing airports, smaller airports in third tier cities. We're doing in Adampur. We've done an extension in Goa. But we have not bagged a greenfield airport. For example, the main airport in Goa, the bigger one that got done in North Goa, that went to L&T. So once you go to the 750 crore, 800 crore range, it opens up these kind of bids which we can bid for a much bigger central railway station, or parliament, or a lot of government buildings, which the numbers might be less, but the competition is also much lesser. So
Fewer players in the market.
Fewer players.
But competition
will be there. Competition will be there. But as I said, it's always better to compete with professional players who've also seen the whole cycle, who've been there for 20-30 years. They've made the mistakes. They know the game, and they are not playing the short-term game. Unfortunately, in the 200-300 crore range, often we come across competition who are new in the market, who are playing a short-term game, sometimes we feel, or probably making errors in their costing, which they'll pay for in the future. But we lose the job,
Okay. So they try to undercut you.
Absolutely.
They don't mind getting a lower margin from those orders.
Absolutely. I mean, sometimes I feel they're probably making a mistake. We've done these errors in the past. We've burnt our finger.
Okay.
We've been to ICU and come out. And so at this point, our wounds are still fresh. We do not want, because you can take a project easily. You can enter at whatever price, but it takes 3 years to finish a project and get your bank guarantees out and get your last payment out, retentions out. Until then, you're not done. And sometimes, you don't want to be putting your bandwidth on a project which you know is not going to make you money. And then at that, give up a project which might come, which can make you money. So we are here to make profits. I mean, we are not here for top lines.
Okay.
I mean, whatever best profits we can churn out for shareholders, that's what we are in the market for.
Okay.
So,
Okay. So in these orders, I mean, you use metals and cement and all for the as a raw materials. And as you told, these projects goes on for like 3 years, 4 years maybe. So how are you pricing in all the fluctuations in the raw material cost for you?
so
Like-
most of the key materials are base priced in
Okay.
these or indexed. So either the price at which we have bid is documented in the contract, and thereby any fluctuation up or down on these material will be paid by the client, or there's an index, the date that you bid for the contract, there's a government index of prices for all materials, and as we execute, we would be getting our escalations based on the index movement that the government catalogs from quarter to quarter. So most of these risks are covered. The labor risk, or sometimes sand or some smaller material risk, remains with us. We tend to price for it at the time of bidding, for a expected escalation or inflation over the 3-year period. If things go wrong, yes, you can. So that's a risk in our pricing. But the weighted contribution of these elements where the risk remains with us is much smaller.
Okay. So you don't have too much risk. You
No.
are able to maintain stable
Yes,
margins
absolutely.
and all.
Absolutely.
That's good. And okay, next coming to your subsidiary GMP Technicals, I think it's into the business of clean room partitions and all. If you can tell us a bit more about that business.
So GMP is a company where we are 85% owners, Vascon, and 15% is with the technocrats who run the company. It's not our core. I would say it's not our core strength to operate that company in that sense. But that company is again in a very niche field of making clean room partitions. Which the reason I call it niche is because, of course, in pharmaceutical and hospitals, they have been operating for a long time, and clean room demand has always been there. But now with Make in India, taking off, and we are having semicon factories being set up, we are having EV coming in, and most of these factories, all kind of backward integrated smaller factories in these two industries would need chip manufacturing, and that is coming into India. We're taking over a lot of these manufacturing from China. China has been far ahead. With that happening, demand for clean room, non-pharmaceutical demand for clean room is also going up a lot. So GMP has a fantastic horizon in front of them to capture these markets. Having said that, in Vascon, again, as I said, our strategy has been to focus. In Vascon 2.0 strategy is to focus on EPC and real estate as our core strengths. And so we do not want to be holding on behalf of our shareholders another company where we don't where they can hold their investments in whichever industry they want themselves. So we don't want to be a via media to hold an investment. So we've taken a call that we will bring to the table only what we are good at, and where we can be directly answerable, and we can churn out equity into profits year on year. So we want to exit GMP if we get a right valuation and a right partner buying us off. Then we would rather exit, use the funds to grow our real estate division. But in the meantime, it's a good company to hold, and if we have to remain owners of GMP, and it's not a bad thing at all for us.
Okay, so you would be taking decision for the same in future maybe.
So when the price, we are not desperate to sell. We are not in a position that we have to sell or any such thing. If we get a right price, we do have a mandate in the market. At any point, if we get a right price, then we'll take that call.
Okay, because I think the subsidiary is a lower profitability business compared to your other business.
Sure.
But the growth has been good, and it has been seeing tailwinds.
Sure. So as we were discussing, again, EPC or real estate is a brick and mortar industry. Your PE multiples that you can expect from the market, or the bullishness you can expect, however good you perform. It's a stabilized industry, and whereas some of these industries which are in the upcoming sectors like EV, they can get sort of an optimism and a jump, and the demand, the growth they can see can be much higher than what we can see in our. So that way, GMP is very aptly placed in the right.
Because if I can
industry.
add to it, a couple of days back, I was in an electronic company's factory,
Right.
and they set up 2 new factories, and both of those factories had a clean room in them.
Right.
So I think the growth
Exactly.
for the clean room in
Clean
the
room
future is there.
So profitability is at this point again due to scale.
Yeah.
They're into EPC. Their profits are not going to be like real estate, but their profits might be similar to EPC. But the potential to grow
Okay.
is much higher
Yeah,
than So I think sometimes the market rewards it. Even with low profitability, they give multiples. But forget the market and multiples. I think the company definitely has a lot of potential with Make in India taking shape.
Okay. So, okay, that's what understood that you might take a call in the future if you get a good exit.
Yes, I mean the only reason we take a call is not anything to do with GMP. It is just that so what I am telling you is the company has a good future and the shareholders can benefit. But the shareholders understand this as much as us. So they can buy GMP directly.
Yeah.
Why does Vascon have to play a via media role to hold GMP on behalf of our shareholders? So I think we are not here to invest on behalf of our shareholders. We are here to do what is our strength and increase the equity and churn out profits.
You want to focus on your core business.
Yeah, and be answerable directly to the shareholders.
Yeah,
No excuses.
So how are you looking at the, I mean, if we leave apart the GMP and in the core EPC and this real estate business, focusing on the EPC, there have been currently an capex cycle going on for the companies. So in the EPC, you set up offices, you set up the plants as well, or it's only the offices that you set up for the private players?
So if it is industry, we will be setting up their plants, we'll constructing manufacturing plants. If it is like IT, then we'll be setting up their offices. If it is residential, we're also doing residential for clients like Godrej or State Builders. We'll be building houses. So it all depends on the type of building.
Okay, so I think, but you are majorly focused in the southern region of India currently. Any plans to move towards, because Gujarat side is also seeing a lot of plants coming up, even in the northern side. So do you have any plans to move towards that region, because you have the capabilities, you can do the projects? So are you planning to enter into those markets?
So from EPC for us is across India. So we are not focused in the south. In fact, today bulk of our order is from Uttar Pradesh and Chhattisgarh and Bihar. For government orders, good proportion of our order backlog is coming from these 3 states. Then we have work in Rajasthan, we have work in Punjab. Then we are working a lot in Maharashtra, of course, being our home state. And then in Karnataka and Tamil Nadu as well at this point of time. All big projects in each of these states. So we are not, averse to going to any other state. We haven't been to the east or far east. Just coincidentally, we haven't, taken the plunge to go that far. But if a good project comes along, worthy of our entry into these states, we have no issues. So in EPC, we are nomadic. Generally, wherever a project comes, we go there. Our team moves around. In real estate, we will focus on 3 cities, but in EPC, we will go everywhere in India.
Okay, so real estate would be this
Mumbai, Pune,
Coimbatore, and for the EPC, you can move to any markets you want.
Yes.
So your plans for growing this EPC business and working in any other markets as well. So do you think you have the senior level capabilities, managerial capabilities to do so, or are you need to hire more people for taking the business to that level?
So currently we are executing at a level of about 1,000 crores construction, both real estate plus EPC put together. This current year, our target would be to exceed 1,000 crores with EPC and real estate alone. And for this and for another 30, 40, 50%, another 2-3 years of growth till we reach about 1,500 crores, we have the bandwidth in terms of senior staffing to handle all this construction. Of course, when we get new projects, we keep having junior staffing augmentation at site, but senior staff, we have a good team. We have very low attrition at the senior level in Vascon. It's a company, we focus a lot on our employees, on transparency, on sort of being, giving them the freedoms to make mistakes, take decisions. Our chairman, Mr. Vasudevan, and our MD, Mr. Siddharth, both are very focused that the employee spirit within the firm is what will drive us and keep us ahead of the competition. And so there's a lot of emphasis on training. There's a lot of, when we identify a team, that we like, they become family. So we do not let them go. So we have very trusted, good quality senior bandwidth at this point of time. For the next 2-3 years at least, I don't see that as a problem. If we grow beyond that, yes, we will have to again groom. But by then we will groom from our system. So we tend to groom people down up. We do not employ typically at the very high level from outside. We tend to groom people down up and promote them and hand over responsibility to them. So the loyalty that they have to the company, because we are operating in various divisions, various cities, and we would always want to have a team that comes from the family, not just comes from somewhere else all of a sudden.
Okay. So you have capabilities in the human resource front.
Yes.
And what about the capex front? So, I mean, if you look at manufacturing companies, we know they would have to set up factories and all for growing their top line. What kind of capex you require to grow the business? Like, what are your major investments?
So in EPC, our major investment would be assets that we would need in terms of machinery at site and shuttering assets at site. But bulk of this, from an EPC standpoint, our capex is also funded from either the working capital limit which we have, which is a CC limit, and other than that, we get advances from clients to start their projects. We'll have to put up a bank guarantee for that typically. So our BG limit and CC limit that we currently have, which we keep augmenting, helps us secure funding from clients to procure temporary assets or permanent assets that we need to keep the growth going. So we do not, again, as I said, because we are handling both real estate and EPC and the same shareholders, the same balance sheet, we do not want any confusion on the usage of funds. Bulk of our equity we focus where we can churn out higher returns in the real estate side. And the working capital for EPC is very easily managed from the client side by putting up bank guarantees.
Okay, so you have been telling that real estate business has been lucrative for you, but I think last year there has been some slowdown for the company. What has been the reason for that?
Real estate hasn't slowed down actually, but because it's cyclical in nature, the revenue recognition in real estate comes only after completion. And so we do not have enough projects to be completing on an average basis every quarter. So whenever we have completions, we recognize revenue. In the meantime, it is held as inventory and we do not get to see revenue. And that's why you see the fluctuation over the last 3 years in terms of revenue that real estate is contributing. And this anomaly will exist for another couple of years till we have enough projects to average this out. But in the meantime, we, from 2016-17, after we stabilized and we decided to grow again, we took a call to grow the EPC division first because it is lower in capex and easier to push and faster for you to come to your potential. Now, the last 2-3 years, we've been focusing heavily on our real estate. The brand that we've built over 40 years is huge, and the quality of real estate that we deliver is far superior to most people in the market. And so we want to now leverage that, of course. And last 2 years, we've been focusing on growing our real estate portfolio. So you will see over the next 3-4 years that the contribution of real estate as a percentage to our revenue will continue to grow. And that is good because real estate's gross profits are also higher. So this overall will pull our company level profit percentages higher.
Do you have any targets like in 4-5 years, how much contribution you are looking from real estate?
So currently real estate is only about 15% contributing to our top line. We want to take this towards 30-40% over the next 3 to 4 years. So at least we want a good mix of EPC and real estate coming into the balance sheet. Also, you have to understand, the more real estate does, the more EPC we get from our real estate team anyway. So the best private client Vascon as a contractor can have is Vascon's real estate side. So over there, you're not worried about your payments coming on time. You're not worried about bank guarantees, and you're not worried about many of those risks. So you can focus on good quality engineering and execution. So it helps both divisions if real estate grows. So that is the focus. And we want real estate to easily come to about 30-40% of our top line in the next 3-4 years.
3-4 years. Okay. And I mean, so just to end with it, what would be your vision for the next 5 years for this company would be?
So the vision is very simple. We do not want to stray from our focus, which is to grow EPC and real estate on a non-capital intensive basis. So we want to play the third part of real estate, which is essentially to design, develop, construct, sell. And we want to do that without speculating and waiting for prices to rise. We want to do it in keep the velocity of sales on. And in the EPC, we want to grow our ticket size or order size from 500 to 750 to 1000. Hopefully, we'll touch 1000 crore, single order of 1000 crores within the next 3-4 years. And we want to maintain a 20-25% growth in the EPC division. Currently, we did about 700 crores last year, third party EPC. We are focusing to cross 1000 this year, and we want to continue that growth 20-25% going on as the EPC top line. And real estate will have to compete harder and catch up because they have to come to 30-40%. So we will continue to grow real estate at a faster pace in the short term, because real estate is punching again way below our potential at this point of time. So we have huge potential to grow that.
So currently, rough numbers, currently how many real estate projects are going on for you?
We are currently executing 4, and we have another 4 which we are in various stages of launch and approvals.
Okay.
So we have 8 projects in hand which are all tied up, under execution or ready to launch.
Okay.
And then the team is still tying up another 3-4 which are not yet at a stage where we can announce, but
Okay.
working on tie-ups.
And the ones that have been launched, 3-4, what have been like the sale? How much percentage has been sold out?
About 70% is sold out. About 30% is
Okay.
yet to be sold.
That would be sold in like this.
Yeah, that will happen in this year itself.
That's a year itself.
This year
Good.
itself.
So it was great talking to you, sir. We got to know a lot about the civil construction industry and the real estate, and about your story and about this company as well. So that's it, guys, for Vascon Engineering. I hope you like the video. Thank you.